Yes, we are live at Kid Sasa TV, and in studio is one and only Mr. Sam. Mr. Sam, how are you doing?
I'm very well. How are you?
I'm doing awesome. So we are doing this show because Kenyans, a lot of Kenyans in diaspora don't have much information about this critical insurance cover.
Okay.
So just maybe we did the show last time. Maybe you can reintroduce yourself once more, once again, and then we take it from there.
Okay. Thank you very much. My name is Sam Wainena. I'm an insurance and financial advisor with the UAP Old Mutual Group. I've had an experience of just about 20 years in this business. So, the kind of advice I give you is very, very intentional and deliberate. And just to make sure that as you go through life, through your savings, through your investment, through education of your children, taking care of your family, it is you buy package that are able to serve you well within your budget. And in case the need arises that we need to pay you, we pay you in very good time. So you are in very safe hands with me, and I hope to get more of you, and I assist you to plan your finances and take care of your families now when you are able, or when you are energetic and young, and even into retirement. So it's a whole lot of financial instruments we talk about, but all geared towards making your life very sweet in terms of the bills you have to pay, in terms of development milestones, in terms of taking care of your children, and in terms of taking care of yourself. I think that is good.
So when you talk about critical illness insurance, what is it
Yeah.
different from the normal from the normal cover?
I want to step back a step and try to say the three main important things you need to be able to do in terms of financial planning is: number one, you need to do accumulation of wealth. Accumulation of wealth is your savings and investments. Whether you are doing fixed deposits, whether it is treasury bills, whether it is buying shares, any kind of savings, including in a circle, that's a savings scheme or even a bank account. Now, the next pillar in terms of financial planning for your house of wealth to start farm is what we call conservation. Conservation is trying to conserve what you have been able to accumulate. And this talks to emergency funds, things that come to disrupt your financial cash flow. We also talk of insurances, from personal accident to medical insurance to health insurance, and including now what we call the severe illness cover. Obviously, the final pillar is what we call distribution, because much as long as we are alive, we also know that we are going to die. How do you give away your wealth? So the critical illness cover comes into the second pillar, the conservation of wealth. So the product comes to give you a financial muscle in case of diagnosis of critical illnesses. And critical illnesses are not your normal common cold or an upset in your stomach or a plain headache. No. They are defined as the dreaded diseases that when it strikes, it has a habit of eating all your savings and investment. And most of the time, it leaves your family destitute. So the cover covers 16 of them. So I think that's the basic definition of the critical illness cover.
Okay, you sent me there's an article you sent me the other day, and just before I ask you a question about it, what what are the types of critical illness covers does All Mutual have?
Okay, the diseases that are covered within the critical illness are the following. There are 16 in
Uh,
total.
I asked about the types, the diseases. I think we'll go on it later on. What types of
Yeah.
critical covers?
The critical cover is just one product in itself. It is just called a critical illness cover or a dreaded disease cover.
Okay.
Yes.
All right. You wanted to talk about the diseases. Please go
Yes.
ahead.
Thank you very much. So as I mentioned, these are the diseases that wreak havoc in your finances, and the following are covered. Number one is heart attack. Number two is cancer. Number three is stroke. Number three is any major organ transplant. This includes kidney, heart, lung, liver, pancreas, or bone marrow. You also have what we call renal or kidney failure. You have a disease we call paraplegia, is a form of disability. We have open heart surgery. We have aortic surgery. We have multiple sclerosis, motor neuron disease, muscular dystrophy, Parkinsonism, rheumatoid arthritis, and the second last is dementia. This is loss of memory. And the last one, which is not necessarily an occurrence in natural order of things, is what we call accidental brain damage. So you fight the first 15, there are things that attack you based on age or you genetics predispose you towards it, but the only one that comes from an accident related is the accidental brain damage. In occurrence, you find like cancer has taken almost a center stage in our lives. Stroke also is there, and kidney failure. So, and in fact, also heart attack. So you find these diseases are very frequent, even into very, very, very young people. You find people in their early 20s, 30s, many people in 40s having this kind of conditions. And as I mentioned, they tend to eat most of your savings, and that is why we advise you have the cover. Back to you.
Thank you very much, Sam. What do you understand by standalone cover, and what is it, or how is it different from the bundled one?
Okay. The standalone means that it is a basic benefit, whereas the other bundled ones are what we call riders within a basic benefit. For example, allow me to explain. You can buy a life cover that has a critical illness bundled into it. And this is what it means. If you're covered, say, for 5 million, you are told that, that is on the life, the primary benefit, which is the life. You are covered for 5 million. Then you have a rider, which is a critical illness. And it says that in case you have a critical illness, you are going to benefit at 10% of the basic benefit, meaning the basic benefit is 5 million of the life cover. So we are going to give you a 10% or 20% of the 5 million. So in case of diagnosis, in case you have cancer and you claim you'll be given 10 or the 20% or 30% they have given you as a rider. Now, when it is standalone and you have covered yourself for 5 million, we pay you the 5 million. So one is more or less like a sub of the main benefit, while the standalone is a benefit in itself.
Okay, the text you sent me, you said the cover doesn't pay the amount of cover. For example, if you buy 10 million cover at 7,000 per month, in case of diagnosis of any of the 16 mentioned diseases, we pay you the 10 million.
Yes, that's what I've just said. Okay, sorry?
Go ahead.
Yes, I'm saying if you are covered for 10 million, and obviously based on age, on gender, on your smoking and drinking habits, and when we do your risk analysis and we tell you now, Habib, your 10 million cover will cost you 7,000 per month. You'll be paying the 7,000 per month. So if it happens, having paid the first 7,000, we pay you the 10 million. If it comes in 2 years' time, we still pay you the 10 million. you know. So it pays you that lump sum. And the distinction here should be made that we do not pay the hospital. We pay you, the contract owner. You know, the issue of medical cover, we'll find that when you claim you are given, okay, when you are on cover, you are given a card. So when you go to hospital, you show the card and they do whatever they need to do for them to get the approvals. This one, we don't deal with the hospital. It's a contract between Old Mutual and you as a client, such that on claim, we ask you for your bank details and we pay you the 10 million.
Can this cover, because I realized, or rather I noticed most of the illness, especially cancer, most of Kenyans get treated overseas, especially in India.
Yes.
Does this cover overseas treatment?
Technically and directly, let's say yes, because we don't need to know the details. The most important detail we need to know is that Sam Wainaina here was on cover with Old Mutual and he has been diagnosed with cancer. We are going to pay him the 10 million or the 5 million or whatever amount of cover he had. So it gives me now as the client the amount of money to be able now to organize where I can be able to get the treatment. In fact, sometimes you find the people changing because I have the cover. I can go now to South Africa or India or to Europe, depending on where they think they are going to get the best medical cover. This doesn't work like a health insurance where you have to get the approval of the doctor or the company gives you authority to be able to spend your money elsewhere. We give you the money to give you the upper hand in deciding where you're going to get the medical attention you so require.
How do you gauge? Let's say, for example, someone is having cancer and maybe the treatment is going to cost, let's say, 5 million. Do you give the exact amount, or do you how do you go about it?
Okay, when we start with you, for example, we are going to do an analysis because as a product of insurance, you need to gauge how much you want to cover yourself against. So this is based on the client himself or herself. And the client says, I can be able to cover myself for 3 million. That's what my budget can allow. Or I can be able to afford 10 million. In fact, I need to say at this point that the coverage is between 1 million and 15 million. You cannot be able to buy more than 15 million, however rich you become. So it is you to decide, my money can be able to afford me 10 million cover. And on diagnosis, this is what we are going to pay you. We are going to pay you the 10 billion because that is the cover you bought for yourself. So it is not a question of how much the treatment is going to cost and we pay. This is money that we pay you to give you the financial ability to be able now to get the doctor and the hospital of your choice.
Is there any difference between the normal health cover and this cover, this critical illness cover? What's the difference?
Thank you very much. Yes, there is huge differences. So allow me to use a cover of 10 million for the sake of this illustration. Number one,
okay,
when you get your normal health cover and you are covered for 10 million, that 10 million is shared between you, your spouse, and your children as an inpatient cover. And then we go further and we give you a cover for outpatient just within that main cover. So the cost of the 10 million that we are going to charge you will also add now the cost of the outpatient, where you can say, I want an outpatient of 100,000 for my family. That is you, your wife, and whatever number of children you have. Then in the same medical cover, we can be able to add dental and optical, and finally maternity. Those are the main benefits within a normal medical cover. And once you purchase, you are given a medical card, such that when you go to hospital, you give that card. whether you are on outpatient or inpatient, they'll be able to use that card to be able to pay your bill. So the discussion now is between the hospital and the insurer. Now, when you come to the severe illness, the cover is between you and the underwriter. The underwriter is a company that has given you the cover. Now the Old Mutual. There is nowhere the hospital is coming in. So if the cover is 10 million for you yourself, we are going to pay you that 10 million to you. Please note, it is not shared within your family setup. It's an individual cover. If I have to buy 10 million. If I'm able, or if we are able, we are going to purchase a separate cover for my spouse for 5 or 10 million, depending on the ability of our money. Next, we don't pay the hospital, we pay you. Please note that one, that the money is payable to you as an individual. And that is why maybe when you listen to the clip, the lady Juliana talks of that she got that money within 2 months after she claimed. You know, it is the money that was paid to her, not to the hospital. So our idea is to give you, or to protect. If you remember where I started earlier on, we said this product is at a conservation of wealth. Because ideally, if you don't have the cover and you're diagnosed with any of the critical diseases, it would mean, number one, you exhaust the money in your bank account. Number two, you go and take a loan in the circle. Number three, maybe you sell your car. Number four, maybe you sell your plot. You know, it tries to protect all the assets you have been able to accumulate by giving you a lump sum once you are diagnosed with this particular disease, such that we can be able to give you the money, and then you can be able now to go and get the medical attention wherever the funds that you are going, you covered yourself can be able to afford you. Back to you.
I can see Lydia Gashuka is asking, how much is the critical insurance cover? Maybe
a very good question. Yeah, Lydia. Now, the cost will be defined by the following. Number one is age. If you take an age of somebody who is, say, 25, and you give this person a 1 million cover, it might cost him 2,000 bob. The same 1 million cover for somebody who is 40 will cost him something like 3,500. So age is a consideration as we come into costing this particular product. Number two, gender. If you take the 25-year-old person and say it's Lydia herself, it costs her 2,000. But if Lydia has a husband who is exactly 25 years, they share the same date of birth and everything. Because of the gentleman just being a man, it will cost this man maybe something like 2,300 bob. So the dynamics of the cover are: number one, age; number two, gender; number three, smoking habits; number four, drinking habits. Drinking habits meaning alcohol. Because anyway, we drink water and tea and OG. So here we are talking of those things that can predispose you more to a claim of any of the diseases covered. What you may realize is that even your weight is also a consideration, because you are going to go for medical. So if you are overweight, the cover will cost you more. And if obviously you are within your BMI range, it would mean then that you are given cover that has not factored an extra risk within your age and gender bracket. So it is not something that we can be able to say that for 5 million for that 30-year-old, it is so much. We need to get to the individual person, and then we do a quote for him or her.
Thank you very much, Mr. Sam. I also have a question from Maggie. I don't know if you can see it from your side. It would be okay if you answer her as well.
Okay, for example, she asked whether, for example, I'm not a cancer carrier, or at all of a sudden I happen to be diagnosed with cancer. I haven't paid a quarter of the medical cover. Will you still start? Okay, a very good question. Please note, this is a process that you require for us to be able to give you the cover. Number one, we need to do the application form. Number two, we need to take you for medical underwriting. Now, medical underwriting, if you take a cover of 1 million, you just need to go for the normal, say, HIV test and blood profile, which covers your sugar and your pressure, these basic things. As you take a bigger cover, say 10 million cover, and if you are older, you find that the list goes now to the likes of ECG and looking at how your kidneys are performing, such that if you have filled the proposal form, your medicals that you do have come in and you are good, and then you make the first payment, then you are on cover. You are given a cover by the company. Now, whether you have paid one premium, that's what we call the monthly contribution, whether you have paid one premium, 2 premiums, 20 premiums, or even 100 premiums, we are duty bound to be able to give you that particular cover. When we do the medical underwriting, and it doesn't show cancer, and cancer comes in 3 months' time, we pay you. So the underwriting, or the reason why the medicals are done at the point of starting is for us to be able to assess the risk. Are we able to cover Aggie for her 5 million cover, and she's only paying 3,000 per month? So if the medicals are right, you are on cover. And then if it comes tomorrow, then that's why you took the cover in the first place.
So in this case, who is eligible to apply for this kind of insurance?
A very good question. You are eligible if you are between the ages of 18 to 54.
18 to 54.
Yes, and then, okay, obviously, depending on the amount of cover, at a point we also ask for what we call financial underwriting, just to make sure that you are able to pay for the cover. So we look at your pay slips, how much you are earning, is this commensurate? Obviously, and we spoke about it the last time I was on air, is that there are people who buy for others for them to die, and then you benefit. So we look at that aspect. But obviously, that is when the covers are a bit extreme. The small covers of 1 million to 10 million, you don't go to that length. So you are on cover between 18 to 54 years of age, and you can buy a cover of 1 million to a maximum of 15 million.
1 to 15 million.
Yes.
How long does it take for someone to wait for the approval of the cover?
It is just the normal underwriting process. Just at the start, like if you fill the proposal form with you today, maybe you are going to go for the medicals tomorrow. And from the service provider, we get the medicals in 3 or 4 days, depending on the size of the cover. Again, the medicals will be different. So if the medicals come maybe by the next week, it is received by the new business department and taken to a underwriting department. So give us at least 10 days, 10 working days for us to be able to tell you whether you are on cover or not. And nowadays, the cover starts immediately. If the underwriting is done and everything is good and it is accepted maybe on Wednesday, which is say 21st of January, your cover starts on that particular day. So, and the first payment you made then takes care of the first month from now, the 21st of January to 20th of February.
Still, we have Aggie there asking some question.
Yes, I see Aggie ask, what about the person that don't have money to start for bills on hand and have a medical cover? Do you mean the person can die helpless and have already enrolled to medical cover? Is there a reconsideration? Okay, obviously, if you are diagnosed with any of these diseases, and for example, you want to go to India for medical attention, then on priority basis, we process your claim. It is very, very easy because you submit your paperwork and maybe in 2 weeks' time, everything is done. So by the time you get your passport and you get the hospital reservations and you get where to stay in India, you have money in your bank account. Right now, I'm processing for a claim that the client claimed on 29th of December. I just was in her house like 4 days ago. just to fill the bank details, because again, sometimes you are incapacitated, you cannot be able to move. So I had to go to her house and fill the bank details. I'm very sure by Wednesday that money will have been paid. So it is fast. You cannot die helplessly, Agi. We'll be there to sit in and to start with you, just to make sure that you have the man to be able to assist you. I think, Habib, maybe you can share with them the testimony from Juliana Moiro, the video I shared with you, such that they can hear for themselves. Thank you.
Does this cover, is it only applicable to employed people or also the self-employed? I think I also got the same question. Yeah.
No. Anyone can be able to buy. Anyone can be able to buy the cover, provided you are able to pay. If the proof of ability to pay is required, we can give your bank details. You don't have necessarily to present a pay slip. So you can present your bank details to show that your account is good to be able to afford the cover. But as I said, that goes to extreme amounts of money. And if the company, the rating department feels that you need to prove that you can be able to pay. Obviously, we take it as a great concern because we don't want you to be on cover for a month and then tomorrow you are off. We would rather try to make sure that everything is good, unless the unforeseeable things like the likes of corona. Sometimes you find the cover has to be stopped because somebody was working in this hotel, there's no more business. So, you can't be able to afford to pay. So those unforeseeable we can be able to consider as we go along.
Based on the example you've just given, if that case if that happens, does the insurance refund the money, or no. How do you go about it?
No, the only thing we can be able to do is to give you what we call a premium holiday. A premium holiday is when you are told now you are not able to pay for so long. We are going to give you 6 months to be able to work out how you are going to pay. So within that 6 months, then you are able to organize yourself if you are able to. And then you come and continue. You can opt to pay the arrears and move on instead of that period, you being told you are not on cover. By the way, the companies are very, very considerate given the situation that we have found ourselves in.
Okay. About the cover, I'm pretty sure we have the family and we have the individual covers, right?
No, it is purely individual.
Purely individual. What of the family members?
Okay. If I have to buy me and my spouse, we have to apply for it as individuals, So it is upon me to decide whether I can be able to afford whether she can be able to afford for herself. So it doesn't cover the children. Remember, we said you are eligible between 18 and 54. So you cannot have a minor who is 9 years being on cover. Although with our proposals, we are requesting that now that we have things like leukemia with very young patients, can't we just have something that the parent can be able to pay for the child? So these are things that are consideration, and once they come up, we will be able to share with you.
Lydia has a question for you as well.
Yeah, Lydia, unfortunately, if you're above 55, in fact, if you're above, when we talk of insurance, we talk about age next birthday. So when I said 18 to 54, I'm saying anybody who has not hit 55. So you cannot be able to cover if you are 55 years exactly today. No, you cannot. So you are not eligible for that.
So the minimum amount you can advise those who are watching you to start with should be how much? Because we cannot say that you cannot tell me to go for 10 million and maybe I'm not able to do that. And what's the difference between someone who goes for a 15 million cover with this one who goes for 3 million? Do they get the same benefits?
In terms of advice, I would let this one be a little bit personal, because here, this is a cost. I mean, let's face it, it's money you'll be
Yes.
paying off every other month. So we can leave it to affordability. You know, why I started earlier on by talking of the three pillars of financial planning: the accumulation, the conservation, and the distribution, is because we have a role that we should be able to advise our clients as much as possible to do what we call 80-20 rule. 80% of your free money should be able to go to savings, and 20% of the money should be able to go to insurances. So depending on the insurances you need to buy, because as a go person, in my understanding, you don't require a life cover. So we can buy more of the severe illness. If you are married and you have children, then we can talk of you having a life cover and a severe illness cover. So it is a question of where is this prospective client in terms of the journey of life. Are you committed into family obligations? Are you free? And there are some people who are free, and maybe they come from a rich background. You have actually a stipend from your father and mother, like 50,000 from their investments. So in that situation, again, we can still tell you it is important to be able to increase your cover. So it is purely a question of how much is the affordability of this particular prospective client. Now, when you come to the question of whether 3 million or 15 million, we shall pay you the amount of cover. Whether 3 million or 15 million, we are dutable once we take you as a client to be able to pay that money. So it's a question of what comes to you. What did you buy? 3 million or 15 million, we pay you that.
We usually get, actually, we rarely get very open answers from insurance people. If, let's say, for example, I buy the cover and along the way I decide to cancel, is it possible? And if it's not, will I lose my cash?
A very good question. And nowadays, I think we have become very honest. Okay, maybe not all of us, but at least on my behalf, I know I'm very honest, because, you know, we talk of insurance as based on what we call utmost good faith, you know, that look at this scenario. You buy a 10 million cover, and at your age, this 10 million, you are supposed to be paying 5,000 per month. Imagine you claim this money after, say, you have paid for 3 years. A total of 3 years, you have paid 180,000. You know, the question we should be able to ask ourselves as consumers: what does Odmicho do to pay 10 million from an investment of 180,000? You know, this is what we call utmost good faith. So the cover is purely an insurance, and it can only pay you on diagnosis of any of the 16 diseases we read earlier on. You know, so you cannot pay for 5 years and then come and say, you know, my 5,000 times 12 times 5 years, that is like 300,000, give me back. No, that is the risk we took with you. In case you are diagnosed between the first month and the 5th year, we could have paid the 10 million or the 5 million to you. So there's no money that comes back to you. Brutally honest.
Yes, we still have Agi there with you asking some questions. Please respond to her.
In case I have a cover of 10 million and settled already, I happen to die with an accident, is there a way this money can be compensated? Now, if you bought a cover of 10 million and it has already been, you have been paying, if I get Agi's question right, if you have a 10 million cover and you are paying, if that's what settling means, and then you die of an accident, it cannot pay, because accidental death is not part of the things that are covered, the diseases that are covered here. This is by definition a critical illness. I said when I started, it is not for headache or stomach upset or kizuguzugu. Apana, this is for those diseases. And I can see Habib, you put a number of them there. I can see it's running on the screen. So those, if you are covered for cancer, you are diagnosed of cancer, we pay because of cancer. If you have this cover and you have stroke, we pay because of stroke. If you have this and you have kidney failure, we pay because of kidney failure, not anything outside that particular bracket.
The examples of the diseases we put there, must they only cover one illness, or it can cover all of them?
It can cover all of them, but remember, it depends on which one comes first for you to claim. We have instances where you have say a condition that can cause another one, So if you have stroke and for some reason it can cause coma, then it would mean we have paid already because of the stroke, So, and we don't pay you in bits because you had a cover of 10 million, you had a stroke, we pay now 10%. Apana, we pay the 10 million because one of the conditions that was the base at which the cover was done has been diagnosed. So we pay you because of stroke. If you come because of cancer, we pay because of cancer. If you're in a coma, we pay because of that coma. So it cannot be that we paid and then we pay again, because the benefit is once and for all, for whichever comes first.
Let's do an example. For example, someone in Dubai has been paying for this cover. Of course, the cover is in Kenya. And this person gets sick in Dubai. Are you going to pay for the medical bills of this patient in Dubai?
Yes. Remember, we said we pay the person, not the hospital. So the person in Dubai, what he or she will do is just to let me know that I've been diagnosed with this condition. If it is one of them, I'm going to assist the person to do a claim letter. Number two, I'll submit the claim letter, and I'm very sure, because now I've been in the system for quite some time, we can actually do all these things from the first instance. Because what they want is a medical record to prove that truly this is a medical condition. So we are going to do the medical cover, and I tell you, please attach. Now this is very possible to attach those documents in soft form. You get your MRI scan in soft form. So attach the medical records. The only thing they will be able to do is that they are going to take those
I don't know what happened to Mr. Sam there. Let me try to find him. Mr. Sam, pengine nini wifi imeisha. Thank you very much for watching, all of you. Miss Agi anasema hapo your 10M inaenda hivyo. At least good umeuliza hilo swali. I'm just trying to look for Mr. Sam. Niona ameenda wapi. Keep writing those questions as I look for him. Let me look for Mr. Sam as we did that. All right, let me look for Mr. Sam. Mr. Sam. As I look for Mr. Sam, let's go. Hey, Bwana Sam.
Yes, I'm back.
Haujalia stima?
Stima iko, I don't know what happened actually. Stima ni mingi hapa.
Agi is wondering about the 10 million example you gave.
About having paid. No, please.
About the accident.
No, okay. When I was preparing the notes for this particular discussion, and I think, Habib, I think we need more than 3 sessions, because I need to teach the viewers on the things they need. When I was preparing for this presentation, I had indicated there must have insurances. And this must have insurances, number one, for any person. One must be medical. The one you get a card that when you go to hospital, you can be able to claim against instead of paying from your pocket. Number 2 is what we call a personal accident. Give me a second, I talk about the personal accident. This is one of the cheapest cover you can ever have in your life. And as long as you drive and your car has insurance, you are not supposed to be in that car if you don't have personal accident. Please note, the comprehensive cover you buy for your car does not cover you. You know, so what you should be able to do is that when you buy that comprehensive cover, request your agent to be able to give you a personal accident. Now, what is personal accident? Personal accident is a cover that covers you in case of any accidental related kind of a claim. This can be death, this can be injury, this can be disability, total and permanent disability. This can be a medical bill that you are going to use for whatever duration of time you'll be in the hospital. And finally, the personal accident actually gives you a weekly income when you have bought the cover and you have had an accident. Now, I'm saying it is a must-have because it is the cheapest. My personal accident for 3 million, I just pay 9,000 per year. And now this is because I'm an elder. You know, for you, I'm very sure for you, Habib, given your age, it will cost you for 3 million. It might cost you like 6,000 or 7,000 per year. So now, Agi's money will not be lost because the 9,000 cover for personal accident will be able to pay because it covers those kind of happenings. The personal accident, an accident-related cover. So make sure in the minimum, even before you come to purchase the severe illness cover, you have the medical and you have personal accident. I'm very sure wherever you guys are, and most of the listeners there are people who are able to afford a car. So on over and above your 50,000 per year on the car, put your 10,000 for yourself, because the cover is actually the 10,000 is much more in terms of cover than the 50,000 that has covered your car. So 50,000 will cover maybe a car of how much? This is like $1 million, Bob. But you see, your 10,000 covers you for 3 million and above. So it is something I advise my prospective clients that if you have a car, please buy a personal accident. Even if you don't have a car, you can still be able to afford this thing. You can die in a matatu, or you can have an accident in a matatu, or you can be shot, or you are walking across some place and some construction stone falls on you. It is important. So medical and personal accident. And then now we can be able now to go to these other covers now, like the severe illness. But must have medical and personal. Kindly see me for all of that. Thank you.
Those people who are in diaspora,
yes,
how do they register or apply for this kind of cover?
We can always make plans, either when you are here or even when you are there, because we have reciprocal arrangements with some medical providers in different countries. So Odumicho just requires to know who is the best medical provider, say in Dubai or Qatar or in India, and they said you for the medical underwriting. The rest of them, in fact, nowadays we do our proposal forms online, and then you can pay by M-Pesa or whichever other means. Nowadays, I think in terms of money movement, it is easy. Proposal form online, you pay, and then we said you for medicals, we receive the medicals on email, and we underwrite. And there, you are on cover.
does this cover? Is it for a specific hospital? Because there are
No,
some.
no. This cover, remember, Habib, you are saying that this cover pays you. So the contract is between two people or two entities, Entity Sam Wainaina and Old Mutual. Entity Habib and Old Mutual. So in case of a claim, I get the money. So this money will tell me now where can I be able to afford this medical attention. Is it in India? Is it in South Africa? Do I just go to Nairobi Hospital? I mean, whichever one I prefer, that's what I'm going to do. So it is not hospital specific. It is client specific. We pay you that money to go and decide what you want to do with it.
I want you to repeat what you said about the cancellation of the cover.
Yes. This cover, for me to explain it more, go back to underwriting, how you start. You fill a proposal, you pay, you go for medicals, and then if your medicals are right, then you are on cover. Now, we quote the premium either on monthly, quarterly, or half yearly or annual basis. So if you opt to be paying, say, on a monthly basis, then you need to be able to put a standing order as you go along for you to pay the future payments. Now, in the unfortunate event that you are not able to pay or you want to stop the cover, you don't even need to write to us. You just need to stop the payment. But at this particular point, remember, it is an insurance. This is not like Habib, what we have with you. This is not a savings-based kind of a contract that you are putting money aside for a particular reason. No, this is specifically for on diagnosis of any of the 16 diseases that we mentioned earlier on. So if it has not occurred, you cannot come and claim your money back. The relationship between me as the advisor is to be able to tell you that in black and white. This can only be able to pay on condition that any of the 16 diseases have happened to you, and we can be able to prove through our doctors, your doctors and our doctors, that truly this is a cancer case, we pay you. So in case of anything you have not been able to claim, or you have not been able to pay, you cannot come back for any of your money.
Sawa sawa, Mr. Sam Wainaina. So where do we get you?
Sorry?
Unapatikana wapi?
Mimi napatikana, I'm here in Nairobi. I'm based at Old Mutual Building along Kimathi Street. You can pop in and you find me there. But better still, you can reach me on phone. My number is Safaricom number 722-326-335. You can also get me on email, swainaina@oldmutualkenya.com. We can always be able to converse and see the best way forward. Before you come, or if you are here, before we meet, you can call me and we can be able to organize or arrange one or two things.
So how many covers should someone have? You talked about the accident, we are talking about this one, and we also have the normal health insurance, right?
Yes. I think I've mentioned the three basic and most important. Number one, medical cover, the one you are given a card to go to the hospital with. Number two is a personal accident, that is for disability. You can buy the amount of cover you want from 1 million, maybe I think to 5 million, no, to 15 million, and then now the critical illness cover. And why I am moving in that order is that you can have a headache and go to hospital and you use the card. You know, there are more likely events for you to use a card than before you come to use the severe illness cover. Number two, chances of getting an accident are even more than even the cases of cancer. That's why I'm saying medical, personal accident, and now severe illness cover. They are critical in that order. And the beauty of it, they are cheap, they are not expensive, it's something you can be able to afford. Even if you're not able to afford a big amount of cover right now, you can start small. Don't. In fact, my other point I'd put here is that let's not compare ourselves with our friends. That my friend has a 10 million severe illness cover, I need to buy the same. Don't buy and chew. No, bite what you can be able to chew.
So can someone start with 1,000?
Yes, you can start with 1,000. A thousand per month in terms of payment. It can be able to buy you whatever amount of cover you can be able to afford. But I remember I mentioned the minimum is 1 million. It is not likely that somebody who is 40 for 1 million cover, he can be able to buy it at 1,000 bob. It will be slightly more. So 1,000 for the younger population in their 20s and 30s. But as we go along, we need to spend a little bit more to be able to get maybe the same amount of cover or slightly more.
So 1 million, that's like how much roughly per month?
1 million cover for somebody in his 20s or her 20s, that would be like 1,000 bob or 1,200. But what you find is that 1,000, 1,200. But what you find is that if that is 1M, if the same person was to buy 2 million, the cover would be like 1,300. If 1 million was costing you 1,000, 2 million might cost you 1,300. So for every incremental 1 million, the cost is far much cheaper.
Your final words, Mr. Sam.
My final, I don't know, where do I start? Because I'm very passionate about personal financial planning. I am one man who gets a lot of satisfaction by disseminating this knowledge in terms of where to save, how much to save, in terms of goal setting. I want to buy a house, I want to buy a plot, I don't have money, can my income, I will give you all those options to be able to know where to put your money in. And I will also try to push you as much as possible to have discipline, to be able to do some of the things. I keep on saying that between the young ages of 20 to 30, we lose most of that time as we try to do different things in life. So if you can, please see me. We have a plan for you in terms of accumulation of wealth and then in terms of conservation of wealth. I may not participate a lot in the terms of distribution of wealth, that bit of financial planning, but the first two, in terms of accumulation, I'll help you. In terms of conservation, I'll help you a lot. Distribution, you can talk to your lawyer. For critical illnesses, and especially for people in their late 30s, 40s, and 50s, guys, please, let's buy this product. What I've seen is that you are living your normal life, something happens, it messes you, messes your goals, messes your spouse, and messes your children's dreams and aspiration because of something you could have paid for, say 3,000 or 5,000 every other month. That's my parting shot. Thank you very much.
Maybe just before you go, I have one more last question. Why do you think people should buy from Old Mutual and not any other insurances? What do you think Old Mutual is offering more? What are you offering more at Old Mutual?
What we offer more, I think I can talk of three basic things. Number one is a financial advice. Because this discussion, you can come to buy education policy, but I'm very sure I'll stop you from buying education policy for me, first of all, to understand whether is that the most important thing you require at that point in life, you know? Because sometimes you don't know. Genuinely, you don't know. So me, the financial advisor, will be able to take you through what we call personal financial planning. And then we see whether what you came to buy was what you wanted. That is where we win. Because the moment you understand why you need this, then you are able to own the buying process as a client. Number two, Old Mutual is extremely client-centered. Client-centered in the sense, and allow me to give an example. We have had this Unclaimed Financial Assets Authority, which has been coming to claim the money that has not been claimed. We have gone every step to make sure that somebody died, nobody claimed the money. We go even to their sub-chief. You can imagine we use your ID to try and locate you. You come from some sub-location in Msabweni or in a far-flung place like Busia. We send people there to go and look for your family, just to make sure that we give you that money instead of sending it to Unclaimed Financial Assets Authority. Because you guys, as our client, you are the focal point of our business. Number 3, it is a claims process. I just mentioned I'm assisting a client who claimed on 29th, and I'm very sure by next week she will have been paid the money. That process of making sure that the client gets the money when he or she absolutely needs it is somewhere on the mutual wins in a very, very, very big way. Thank you.
One more last question, Mr. Sam. Can we transfer, is it transferable, this cover? Let's say, for example, your client passes on, and of course he or she has been contributing, and she's no longer there. Can you transfer the same to her family or the beneficiary?
No. You cannot transfer. I cannot transfer to my wife or to my brother or to my daughter. I can't. The only way, okay, sometimes I find situations where you do the claim, but unfortunately somebody passes on before the claim is paid. There are some surgery like tumors, and something happens, kidogo, you are dead, So if the process had started or if the claim was admissible, whether it had been started, we are going to look at who is a beneficiary in your contract. That person is one we are going to look for, and we pay the money to.
Okay. All right.
Yes, but we cannot transfer.
All right. Thank you very much, Sam. And we hope next time, Pierre, we will have you here in studio.
Thank you very much for hosting me. And I wish all the listeners a very good time and very good decision making as long as their money, issues around their money. Thank you very much.
All right. Thank you very much and have a nice evening, Mr. Sam.
You too.
Okay. Bye.